Well, good morning, everyone. Thank you for joining us for another edition of our weekly real estate backstory. Ming and I are your host. My name is Alan Richardson, the managing broker at Maximum Realty and Realtor Partners.
And my name is Ming Richardson, of the compliance broker for Maximum One Realty and Realtor Partners.
See how she said it? Very compliance-wise. Anyway, thanks so much for joining us. We do this every Monday morning at 9 a.m. We hope that it's of value to you. We love to be able to start your week off kind of knowing what's really going on and
some facts and data, and so you can educate your client wisely and give your client the best advice.
The more you know, the more you're worth is really one of the biggies there. So we kind of want to start off a little bit here today, and we want to talk about what's kind of going on with agent commissions. And there's a lot of folks that are very interested in how commissions are. And there's a lot of folks that are saying that they don't believe that commissions really are variable, that there is no set rates. And, we said that, as long as I've been in real estate, there is no set rates. But the challenge is that, nationwide, it does kind of run about 2.5% to 3% nationwide for each side.
Industry standard, but it doesn't mean there's a set rate at all.
And I guess the reason that we have to start talking about this is, and we see this both on the buyer and the seller side right now. We're seeing where, needing to discuss commission is vital in being, and it's always been vital with being a listing agent. It has always been part of the conversation you need to have. Smart listing agents know that discussion is part of their listing presentation.
Well, in their consultation, obviously.
Right. And so, for smart listing agents that are really looking to work their listing business, they know it's important that we talk about these. This is what we're going to do to market and sell your home, and this is what it's going to cost. And so I think that on the listing side, we've done a really good job. Now, on the selling side, for the buyer's agents, that's kind of been a built-in. Most of the time that was negotiated by the sellers, and they needed to do that in order to attract the buyers, kind of thing. And so we are seeing a time of renewed or increased competition from a lot of different places out there, and especially on the buyer side, we have really got to be doing a better job of explaining our commissions, and also explaining that the commissions may not always be offered by the seller.
And so if that's the case, then you might have a conversation with your client. Now, the Department of Justice and NA are going back and forth on this, because the way they look at it is, one, for transparency. Anymore now, agents are not able to search a property based on commission amount that is being implemented by MLS. Not only that, the commission rate is going to be published online, and for a couple of reasons. For those of you who have buyer broker agreement where you state 3% is my rate, it's unfair for a client to know what they need to pay when they make that offer on a contract, because they don't know what the rates are. So you can't drop a surprise bomb on them, and most of our agents will not disclose to the buyer. So this is some of the real reason where DOJ, Department of Justice, are going having an issue with National Association of Realtors.
Well, mainly, and in the past, realtors for a long time stated that let me use me, and
it doesn't
it's
cost
free.
you a dime.
It doesn't cost you anything. It's
cost
free.
You a dime, because think about it, the ultimate sale price is the total price, which include commission, even those paid by seller. But if you think about it, the buyer's actually purchasing property knowing those prices come with commission.
Well, the other challenge is that buyer commission doesn't make any sense. And I don't mean to be mean. We're in the industry. We kind of understand how everything's done. But at the end of the day, we go to, hey, Mr. Buyer, you're going to buy this home. This person over here is going to pay me, but I owe you fiduciary interest. Trust me, I'm not doing anything for them. I'm all here for you, but yet, everybody knows there's no free lunch, right? And so the buyer, when they buy the house, they're buying it with all those associated costs and fees, like your commission. So, ultimately the buyer is paying,
right?
But the other thing is that just explaining how compensation works and how representation works is so important in our industry. Who do we represent? Who do we owe fiduciary interest to?
Right.
That is just so important that we really put that out there, because, and getting back to where we originally started here, one of the reasons that the Fed is so interested in this right now is because compensation, really is very kind of out there. On one hand, a buyer's agent may show one house and
it may have 3%
and get 3%, or
and the
they
next
may
one maybe 1% or 0%.
well, not only that, but in this market, you may show one house, lucky, right? Or you may show 50 houses, but you're going to get paid the same amount, which, doesn't mean, a listing agent may, take some photos with their phone and, show it to one buyer and put it in the MLS and then sell it, or they may work on, they may have professional photographers, all that kind of stuff. So, they're trying to get their heads around, why don't rates vary based on work, based on experience, based on how much time. So there is a lot of interest out there, but we have to make sure that we're protecting ourselves as well as protecting our clients. And that's really one of the biggest things that we really want to share.
From the buyer perspective, is consumer protection. If you think about it, if you tell your client, my rate is 3%, but yet they have no idea on this particular house what the rate is, it's kind of unfair, and it's not being communicated clearly what expectation of buyers are. So that's one of the reasons why it's there.
And that's the other reason why we really need to make sure that we are doing a buyer's brokerage agreement more so now, because we're seeing listings in the MLS for $1 and
that's
for 1%, and that kind of stuff. And buyer's agents like, what? And they're like, well, I don't have a buyer's brokerage agreement. We haven't discussed it with my buyer that they may have to either increase the sale price or.
And you cannot not show the property because of commission rate. Okay. Yep. You cannot do that.
So, all right. We want to share, we got some, a good bit of market data we want to kind of go over with you today. And so first thing is that the economic pessimism hit a 10-year high to this past month kind of thing. However, consumer sentiment towards housing really hasn't changed all that much. So overall, this always comes out, so this is from November kind of thing, and 29% said it's a good time to buy versus 64 say it's a bad time. Selling, 74% of our consumers say it's a good time to sell. Only 21% say it's a bad time kind of thing. And so you can see it's a 27% increase in improvement versus buying, which is down half. But part of this is when you really start digging into some of the details here. And that's kind of what we want, so I'm going to go a little bit more detail. And so this is, first of all, responding to, consumers that say that home prices over the next 12 months, you can see that 45% of consumers say that prices are going to go up.
Well, 21% think it's going to go down because they think we're in a bubble. We're not.
And about 28% say it's going to stay the same. Overall, that difference is about a 24%. So overall, consumers feel like home prices are going to be going up,
or if not, stay the same.
Yeah. How about mortgage rates? Now, this is one where, we see where right now about 5% of our folks say mortgage rates are going to go down. 58 say that they're going to go up. 32% say that they're going to stay the same. Overall, a net, about 53%, there's a drop in the number of people that think it's going to be going down to staying the same of about 50%. Interest rates are going to be rising. We'll share some more information with you in a minute, but interest rates are going to be rising. We need to be preparing our clients for that, because a lot of them aren't expecting it yet.
Yeah, and a lot of them is, I guess, they're living in a little bubble, thinking that 3% is the norm. It's not. It never has been. When COVID hit, that was historic making of interest rate, because government was trying to ensure that we're not hitting a stagnant.
Yeah. 83% of consumers out there say they are not concerned about losing their job in the next 12 months. That's a really good sign overall for the economy. We've seen the great reshuffling, and we'll share some more data about that in a minute. But overall, our consumers are really very comfortable.
I would tell you, and I have talked to a couple of clients of mine and also just the public in general. The one that are concerned are the one that have gotten used to working from home, and they're not happy about going back to their workplace and the travel and the stuff like that. So, some of those folks are being let go if you don't come back to the office.
But there's such a huge unemployment, they can almost go anywhere right now. So
it is, but they will have to find another job that they allow them to stay in their home. So,
all right. Respondents who say their household income compared to last year, 23% say it's significantly higher. So almost a quarter. That's actually a really good term. About 13% say it's significantly lower, and about 60% say it's about the same. So, and what we see here is that really, we have seen wages increase, and however, we're also seeing some of the highest inflation we've had since, right after the 80s right now. So, that's making it kind of a wash on that side of things, because, everything costs more. How about folks who said that they were going to buy or rent? And what's interesting here is that even though, if you look on the consumer sentiment, it said that now is a good time to sell, not necessarily a good time to buy. You can see that for the last, coming up on 4 years, we're still, the number of folks wanting to buy and still saying that they're going to buy is at its highest number. I mean, one of its highest numbers kind of thing. It's been in the 70s, but it's right at 70% right now. And so even though you would figure that this would kind of equate into more folks want, but the other side of this is what's happened with rents. Like, try and rent a place right now. It's ridiculous. You think home prices are crazy. Look at the rental rates.
But the funny thing is, not funny, but if you look at it, the rental is 27%. That's still a little bit discouraging, because that tells you the mentality or the education of some of the buyer that don't know what their rights are. So it'll be good for you as a buyer's agent, go there and educate these clients and let them know it may not be today, but it can be 3 months, 6 months, or a year down the road.
Now, I am not political. I'm apolitical, as a matter of fact. However, you have to look at, we saw some things coming up. We have some midterms coming up, and this is overall, this consumer sentiment. This is just the public that says what percent, how many folks say that the economy is on the right track, and how many say it's on the wrong track. So only 20% say it's on the right track, 70% say the economy is in the wrong track. And so, again, not getting political with anybody, this is just the data we're seeing out there. And so that you can see that it's kind of been a shift ever since March of 2020 kind of thing, is when that really kind of moved. And
and that's also when we have one of the highest multiple bids, and we're having 85 offers in some homes. That's when all that trend started.
Well, that's when Corona kicked off, but still there's a lot of negative feelings about the economy. Now, on the positive side, if I get the numbers to work here, November job growth came in low. Okay, maybe this isn't the positive slide. Sorry, I'm a little bit there. However, even though it came in under what everyone was wanting to see, unemployment fell to 4.2%, and that is phenomenal unemployment. Jobless claims dropped to 184,000, the lowest level since 1969. We're not talking pre-pandemic here anymore now, folks. We're talking 1969, back when I was a wee little lad kind of thing. So
and diaper.
Okay, maybe not in diapers, actually. So anyway, we are going to see what these labor numbers mean, because the Fed has a meeting next week, and that's going to affect interest rates we're afraid of here. So overall, the consumer price index from a year ago, this is what you can see, and this is why everyone is inflation is such a top of mind topic. You can see what inflation has done for the last 40 years. And so we haven't seen high inflation since the 1980s. Yeah, it was around back then too. But in the 80s, it was really kind of runaway inflation. And so, there is more hope that this is more.
Actually, back in the
transitory.
80s, the mortgage rate with good credit score, the average mortgage rate was around about
Yeah,
11%.
and you were
And
thankful to get it.
and
Yeah.
higher, honestly.
So where are interest rates right now? Well, we really haven't moved for about 4 weeks. We're still 3.1, 3.10. We're at 3.11 last week, kind of thing. So we were 3.10 the week before that. We were 3.11 the week before that. So, we're sitting at about 3.1. And we kind of feel that the market is kind of sitting there waiting to see what happens with the Fed and what they're going to be doing. Fed is still tapering purchases right now on bond purchases, but are they going to raise the lending rate? That's going to drive things a little bit crazy, kind of thing. Because overall, how quickly are rates going to move in 2022? And so, we went out or NAR went and started talking to different economists, kind of thing, and saying, hey, what are we looking at? And so, overall NAR is looking at about 3.5% by the end of the year, kind of thing. So we think that would be really healthy if it's going to be there. We're a little concerned it may move a little bit faster than that. At the same time as we have, some challenges on the interest rate, we are seeing more money going towards down payment than we have ever seen before. So,
Well, because the buyer being educated, and thank you, realtors and the real estate agent out there in educating, and also lenders too, and educating the buyer and letting them know that no longer can you skip by with a minimum payment and expect the seller to pay your closing costs and what have you. If nothing else, we even have appraisal gap now. So thank you, agents, lenders out there that have educated your client about saving up more money.
So overall, right now, the average down payment kind of across the board is $27,500, and that's higher.
High.
That's the highest it's ever been, and so that's that means that more people are walking into their home with more equity right from the get-go as well.
Correct.
We are seeing a lot of folks that are using the Great Resignation as a chance to relocate, and so what we're seeing is that, especially from really pricey markets, we talked earlier about the folks who are moving. And what we're seeing is when folks are in a very expensive market, and that they want to move to less expensive markets. And if you can work remotely, if you can continue to work remotely, some folks are even willing to take a pay cut in order to do it a little bit. But we're seeing where more and more folks are willing to move. The younger the employee, the more likely that they are to relocate to a less expensive area. And overall for Atlanta and Georgia in general, it's a pretty good thing compared to I know we live here, we got to get used to it. We're like, this is ridiculous. But then when you look at like what a 3-2 ranch in California or New York, or flat New York ranch, you're like, sure, okay, we'll stay here, thanks. So that's pretty good. Evictions here in Georgia are up. So I pulled this directly from one of our local newspapers, kind of thing. And so it looks like really big numbers. It's like, oh no, evictions are up huge, because it's in big bold font, that kind of stuff. And so, but there's a couple of things going on here that we want to kind of highlight. So first of all, rental assistance disbursement is so far behind in Georgia, it's not even funny. Only 15% of the money allotted towards this has actually been sent out to the folks in need. And that's really, really ridiculous when you look at, we really are coming out of the end of this kind of thing. But this money's been sitting there, 85% of this money's been sitting there, and we've had people that really need it, kind of thing. And so are the number of evictions increasing? Yes. However, they are still below pre-pandemic levels, meaning, the eviction moratoriums are gone, all this kind of stuff is no longer there. But however, evictions are less than what they were before COVID. So when you see things like this, kind of understand, if we can get some of the funding and the funds to the folks who actually need it faster and better, that number should even come down even more.
Well, what we're trying to state, the fact is that sometimes newspaper will put these headlines in there, but if you look at numbers in relationship to what pre-demic and now, there's nothing that has changed as far as eviction rate.
Yep.
So, even though we do know that foreclosure is coming to somewhat extent, but even with those, just remember the investor are gobbling these things up like crazy.
Well, no,
as
we're not.
well.
We don't see any future out there for this big REO dump of properties and that kind of stuff. There's just not enough evictions.
And honestly, if if you have any bad investment right now, it is being managed on the back end, and where the investor are selling them as a bulk sale. They're not going individual because it's harder and takes more resources to manage it on a one-on-one individual basis. Even though they may have better return on those, the fact is that the resource is not there to handle that.
Yeah. Now, we were just talking about foreclosures, but part of that issue here is that, and it's a good issue, is that negative equity has really fallen, kind of thing. Negative equity is up 31. What that means is people, have positive equity in their home. The amount of positive equity increased 31% in the last year, kind of thing. So, overall, only 2.1% of all mortgage properties, kind of thing, have negative equity nationwide. And that is
very minimal.
Really, really low. But what does that mean for the average homeowner out there, kind of thing? Well, the average home equity gain between Q3 2020 and Q3 2021 was $57,000.
That's huge,
Okay.
y'all.
All right, let's shout that from the rooftop. So, like, when folks say, "Well, I think I'll just keep renting," or the housing market seems crazy. I think we'll just rent. Okay. Well, if you rented so if you rented Q3 of 2020, how much equity do you have now? You have a big fat stinking goose egg is what you have. Whereas if you bought a home, chances are it's worth 57.
Now, on the average.
Now that is national numbers. What's that for Georgia? Well, here in Georgia, 50 grand. Okay, $50,000 is the average equity. Now that's kind of it's based on price point, the whole 9 yards. Okay, so
location.
So if your home was $400,000, that's going to be a bigger number. If you bought a home for $200,000, it's going to be a littler number. But overall, the average homeowner in Georgia over the last year has gained $50,000 in equity in their home. So that equity. We've been talking about inflation.
Mm-hmm.
And like if you're renting right now, what's going to happen with rents over the next couple of years?
It's going to increase,
right? But how about your mortgage payment?
It's
going to stay the same, right?
Steady Eddie.
And at the same time, you're getting positive equity here. You're growing the value of your asset. So this is a really great thing. This is why we want to encourage more people. If we really care about our communities, we're going to help make more folks homeowners, kind of thing. All right, how about men versus women? Okay, dun, dun, dun. Battle of the sexes, that kind of stuff. So, single women outpace men, but not without sacrifices. And so, National Association of Realtors put out their profile of home buyers and sellers for 2020, 2021. And so kind of just looked at, overall, 60% of our buyers are married. Okay. Yep. About 19% are single female. 9% are single males, 9% are unmarried couples, kind of thing, and then 2% is, I don't know what other is. I'm not sure what else there is out there, but sorry, not to be weird, but let's break that down a little bit here, kind of thing, because first thing is that the marriage rate has dropped 7% since the 1990s. We used to be at about 59%. We're at 52%. So we have some of the lowest.
Half. Almost.
Yeah. I mean,
half.
It's down significantly, kind of thing. Now, why do men and women purchase a home? So single men, for single men buyers, the number one reason is desire to own a home, same as single women, and it's slightly higher. However, for single men, the desire to be close to friends and family is about half of what it is for female buyers. And then change in family situation is fairly flat. And let's just be honest, what's change in family status? Divorce,
Divorce.
right? Yeah. All right. So who lives in buyer's home? Well, what we're finding is that more single women move into multi-generational homes. So they'll take the basement, mom and dad will be in the house upstairs, or they'll
Mhm.
take the upstairs, mom and dad. And so we're seeing more and more single women take multi-generational homes than men do. Now, men make on average, and I'm not
More
getting
money.
into it, they make more money than women, and that's not a debate that I am going to touch at all. However, the reason why more women own homes than men is because women are more willing to make financial sacrifices than men are. So, ladies, you're just downright smarter than we are, I think is really what it comes down to. So, overall, single men make less sacrifices than single women do. Women will cut
Cut.
non-essential spending on goods, entertainment, clothes. More women will take a second job. More women will pay minimum on bills. More women will cancel vacation plans than men will. And that's why women tend to own more homes than men do, says they're smarter fiscally, kind of thing. So
Yeah, I think it's the natural nurturing
well, it
in
might be.
women.
And I'm
I
not saying
think a
anything
lot
is
of that
good or bad
is.
about this, but I think I think
It's
it's
a good,
insightful for
yeah,
us to know, more about our home buyers out
or
there.
a behavior pattern between men and women. Honestly,
And,
some of
and
these are
well, the other thing is that anytime that you can target, and I don't mean target in a negative way, but
can service.
but like 19% of buyers are single women.
Mm-hmm.
That's like one of our highest numbers ever on so, and I don't know hardly any realtors that are really looking to service. I mean, that's 1 out of 5 buyers is a single lady out there. And so, if you are a single lady, if you empathize, and if you have a heart to be able to reach out,
Right.
that like that's a pretty significant piece of the market right there. So just like to share that. All right. Again, not getting political. This one's going to seem like I'm political, but the Biden tariff policy has raised lumber costs back to record highs.
Again.
You know, earlier this year, the National Association of Home Builders, NAHB, said that the cost of increased lumber was adding $36,000 to the price of a single home. That number dropped and it started moving its way down until November of this year. On November 24th, the Biden Commerce Department increased the tariff. They doubled the tariff on lumber coming out of Canada, and we get a lot of lumber out of Canada. And so if we have any kind of sway or swing on the political powers that be, I want you to know I think this is crazy out there. And so if any of you guys can help us, like this is one of those that just doesn't make any sense. Like we have some of the highest inflation that we have, and now we're going to intentionally make goods cost more than they should be. And I don't know why that's going on. And I find that fairly ridiculous, not to be mean and not to be political, but I do believe in calling a spade, and I just don't see what the benefit is unless you own a lumber company in the US.
Mm-hmm.
What's the benefit here? I really can't see that, because we were seeing lumber prices taper off, and now guess what? Boom, they shot right back up again. So this is not good for housing. I don't feel this is good for the inflation. I don't feel this is good for our economy. So sorry, I'll get off my soapbox right now. So the president of the National Association went in front of Congress and really promoted improving the veterans buying process. We are all for that. They went there and about 12% of NAR members are veterans, and so this is important. Our family is veterans. And so this is something that's near and dear to our heart. We care a lot about it. They went on there and to really talk about, how the VA program works, how we can improve it. They did a pretty good job. My only area where I disagree with them is I think we've got to do a better job on leveling the playing field on VA appraisals versus
Conventional or FHA.
Yeah.
For that matter.
We have more issues on that side of things. And so there is a lot of talk in there to try and improve that. And we want to see that. But by the same token, I believe in just shooting straight. Like, I think that that's probably one of the bigger areas where we would like to see it addressed as well. All right. This is going to sound weird for me to throw this out here, but OfferPad is offering a 3% referral fee. And I know that OfferPad is the bad guy, right? Nobody likes OfferPad. Zillow's not doing iBuyer. We're all celebrating that. However, I also know that we have had friends of ours that used OfferPad in the past. It was a situation where it was an ugly divorce.
Right. It's a situation, not the norm. Okay. So it's not the normal selling, buying, marketing situation. It's a situation
Right.
of divorce or condition, estate sale, or that they need
Someone needs to move
satisfy.
fast,
Right.
things like that.
Right.
Well, but the other side of things here is that a lot of our sellers want to know. And so here's the bottom line, is that if you will submit your property to OfferPad before you put it in the MLS kind of thing, then you can still make a 3% referral on that property. If that, and now you're able to offer consumer choice to your clients. A lot of our clients want to know, what would OfferPad give me for my home? What would, well, not Zillow anymore, but what would some of the other iBuyers? Well, here's one of those, like their only requirements in order to pay a 3% referral fee is property can't be listed. You can't do it while it's under contract. The agent or the current homeowner couldn't have submitted a request within the last 30 days. And then, the agent has to take photos, interior and exterior photos, and truly represent the seller, which is exactly what we want to do. So again, I'm not trying to super promote this, but we do have a lot of our sellers that are like that they're
I need to cash out. Whether it's I have an aging grandmother. So, sometime in a situation when you have all the kids live in different state, they're not able to manage the estate. So therefore, they want to see what's the quickest way of doing this to get their mother into a nursing home.
Well,
so, and also sometimes maybe a divorce situation, whatever situation is not the
sometimes
norm.
sellers just want some information kind of thing. So, but if you'll do this and you actually submit the offer for your clients, or submit the property for your clients, one, it's going to really make your you ever had those days where your brain stops working and you really can't do it?
Yeah, make you
CMA. Thank you. When you're so like when you show the OfferPad offer, and then you show your CMA of what a buyer's willing to pay for your home in this market right now, they're going to be like, okay, that's just no.
And we'll let you know, they do have some stipulations too. So if you're a seller, prior to closing, the house has to be vacant, clear of everything.
Yep.
So make sure you read those addendum and understand what they are.
Yep. So the White House is seeking oversight on all cash deals. And this is not going to affect us as much as it affects our sellers, and it's going to affect the attorneys more. Because like an all cash sale, when you go to closing, is really pretty simple kind of thing. But apparently the government is worried that there's a lot of people laundering money through housing kind of thing. And so expect to see a lot more signatures and disclosures and all this kind of stuff on, moving forward. We're not seeing a ton of that right now, but we are expecting more of that. Housing Wire went out and released their projections for 2022. It's that time of year. So we've already shared, we shared Zillow's, we've already shared Redfin's. And so this is Housing Wire. And so, they're feeling, first, three major points. First one is that demand's going to continue to be strong into 2022. We agree on that one kind of thing. I mean, right now, current days on market is higher, but that's because it's that time of year. We sell less homes.
A lot of buyers still thinking that we're in a bubble, it's going to bust, and therefore they're sitting, and they're sitting basically and hoping they can get a better deal next year. What they don't realize right now is actually one of the best deals.
Yeah. So, the other thing, if you look at the number of folks that are taking price reductions, that's still really, really low.
Mhm.
I mean, it has gone up, but you can see where our price reductions are now versus the last 7 years. It's still historically at some of the lowest levels. Now it is improving. I guess it's hard to say improving, but it is up, but it's not,
Right.
where it was. How about inventory? Well, inventory is going to continue to be an issue right here. So this is, and this graph shows it again for the last 7 years, where are we at our standing inventory? And so when
Correct.
folks are going, gosh, what's going to happen with the housing market? If you just look at, the number of buyers versus the number of sellers, this is going to be with us for a while. So, we agree with that right there. The last thing is that they feel that home prices is going to remain high into 2022. We do believe that they're going to be high, but we also believe that they're going to be tapering off. We see that being much more into the 3 to 5% range. And I think that's really going to be predicated by interest rates. When interest rates go up, that's going to lower our buyer pool a little bit more. It's going
Well,
to,
the buying power,
Yep.
honestly. So, you can have a price, high listing price, but if a buyer can, your average consumer can afford it, it is what it is.
That's it. So, let me put this in here. So anyway, we are, we just kind of wanted to share with you guys, this week for, we do have some CE classes on Tuesday and other events. First on Tuesday.
Tuesday's our Christmas party. Love for y'all to join us in our
Yep.
airport office, and it starts at 12 o'clock.
Yep. And then on Wednesday, Ming is teaching our very last code of ethics for the year here live in the McDonough office. It's
And I
not
do
gonna be-
apologize. It start instead of 9:30, it will start at 10:30. I have other obligation that came up at the last minute that I
Mhm.
cannot skip.
Yep.
So it will be 10:30 in McDonough location.
Yep. And then on sorry, that was Wednesday.
Thursday.
On Thursday, what are you teaching on Thursday, Ming?
I'm doing 2022 guard contract, y'all. So please come.
She's gonna be in
And
Conyers.
I'll be in Conyers, so therefore, please come to Conyers, and we will talk about some of the interesting point that Ellen actually brought up today in reference to the commission and DOJ, Department of Justice, and what they're doing with NAR.
And then on Friday, there is a virtual business planning for the real estate professional. I believe that's by Meredith, and that is such a great class.
She does
Business
teach
planning
a
is really important
great
right now.
class,
We're getting
y'all.
ready to wrap this up for the year. So we hope that you guys are going to have a great week. Hope you had a really nice weekend.
Right.
If we can be of any kind of service, please let us know. Call, text, smoke signals. We answer it all. So
Thank you, and have a great Monday.
bye.